The 7-step approach to building banking CRMs in 2026. Most banking CRM projects fail because banks try to implement software before they define what success actually looks like. A CRM alone doesn't improve retention, increase cross-sell, or speed up onboarding on its own. It only works when it's built around the right data, the right workflows, and clearly defined business outcomes. We've prepared the 7 steps that will help you to build a successful CRM in the banking sector. Step 1. Start with the numbers. You want to move before a single vendor demo. Decide exactly which numbers your bank is trying to change. Retention, cross-sell, onboarding speed, first contact resolution. Pick 2 or 3, establish where they stand today, and commit to a 12-month target for each. Metrics worth baselining first: 12-month customer retention rate, cross-sell ratio per active customer average account opening time, first call resolution rate. Everything downstream, platform choice, data model, training plan, even which integrations come first, has to trace back to those numbers. If a feature doesn't move one of them, it doesn't belong in the build. Step 2. Map what you actually have. Today, 2 expensive surprises show up in almost every banking CRM project. Customer records that exist in duplicate across systems nobody realized were connected, and legacy platforms somebody refuses to retire. A current state map is what catches both before they derail the schedule. The audit questions that matter most. Where does customer data actually live? And which system is the authoritative source? Which interactions happen outside the CRM? And how do they reconcile with what's inside? Which workflows still depend on spreadsheets, email, or manual handoffs? Which legacy systems need to stay, and which can be retired? Step 3. Get ownership and governance in place. CRM programs without clear ownership stall inside 90 days. You need a single accountable owner, a decision-making forum that can move fast, and cross-functional representation that reaches beyond IT into business units, data, and change management. A typical working structure. Executive sponsor, secures funding and clears high-level blockers. Program lead runs the plan, scope, and day-to-day delivery. Business leads, retail, wealth, operations. Translate business needs into workflow priorities. Data lead designs the data model, maintains quality, and leads migration integration lead. Connects the CRM to core banking and customer channels. Change management lead drives adoption, delivers training, and handles rollout communication. Step 4. Design data first, workflows second, configuration last. The temptation with any CRM project is to start in the software because that's where progress looks visible on the screen. Resist it. Start with the customer data model. One definition of a customer, one identity key, one source of truth. Then design workflows around how your team actually does the work: onboarding, servicing, complaints, cross-sell. Only after those 2 layers are locked should anyone touch the configuration. Teams that reverse this order rebuild the same module 3 or 4 times before it finally holds. Step 5. Integrate in waves by business value. A banking CRM has dozens of integrations it could have. The question is, which one gets built in what order? And the answer is business value. 3 waves. Wave 1, months 1 to 3, the must-haves. Core banking for accounts and customer records, plus identity and KYC providers. Without these, the CRM has nothing substantive to work with. Wave 2, months 3 to 6, the customer-facing layer, mobile, online banking, and the contact center. This is where the CRM starts shaping the experience your clients actually see. Wave 3, month 6 plus, the accelerators, analytics, marketing automation, loyalty, and third-party enrichment. These compound values but don't block go-live. Step 6, pilot in a small window, then expand. Test the system where a failure is survivable. Pick one branch, one region, or one product line. Let a small team run it end to end and find the friction points that only appear with real users. When the pilot works, train the next group on outcomes. Show a relationship manager how the CRM saves half an hour on every client prep. Then expand in waves, with pilot users mentoring the cohort behind them. Phased rollouts cost more in weeks, but they almost always cost less in the end. Step 7. Measure against your day 1 kpis, then keep going. Go live is the start of the value curve. Track the kpis you set in step 1 monthly and pair them with leading indicators that tell you whether the system is actually being used the way it was designed. A starter dashboard that most successful banking CRM teams track. Active user rate of eligible staff, where adoption is genuine data completeness, above 95% on key fields. Downstream AI and analytics will work at risk segment churn falling versus baseline. Retention workflows are doing their job, cross-sell ratio rising versus baseline. Segmentation and next best action are paying off InoXoft as your banking CRM development partner. InoXoft has spent 10+ years building custom software for fintech, banking, and capital markets clients. With 200+ in-house engineers in AI/ML, data science, integration, and secure SDLC, and 200+ delivered projects to our name, we know where banking CRM programs stall and how to keep them moving. Working with InoXoft, you get custom banking CRM development built around your workflows, legacy integration, and API modernization so your core banking data reaches the CRM in real-time, AI and ML baked in, churn scoring, next best action, Gen AI copilots, KYC document, intelligence compliance first delivery against GDPR, PCI DSS, SOC2, ISO 27001, and KYC/AML ISO 27001 certification and partnerships with Microsoft and Google Cloud Plan to build a CRM for your banking system? Book a consultation. We're ready to map your scope, timeline, and business case. Summarizing. On paper, this process looks straightforward. In reality, each step is a moment where a CRM program either gains momentum or quietly starts to stall. Setting kpis early forces you to be honest about what you actually want to improve. A proper audit keeps the scope realistic from day 1. Clear ownership helps decisions move instead of getting stuck in endless discussions. And when you design the data model before jumping into configuration, you avoid rebuilding the same thing later. Rolling out integrations in waves means you start seeing value sooner. Piloting in a smaller setting helps you catch real-world friction before it spreads across the bank. And tracking performance after go-live is what turns a launch into something that keeps delivering results over time. Banks that treat these steps like a checklist usually end up with a CRM nobody really uses. The ones that treat it as a connected system tend to build something that pays off for years. For the full coverage of banking CRM types, features, benefits, AI trends, and the off-the-shelf versus custom decision, read the complete guide on customer relationship management in banking.